Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup as well as the strategies that you need to follow today. Remember, it's the F&O expiry session, the last expiry of the financial year 2025 that we are going to be seeing, and let's see that whether this converts into signs of positivity for the new fiscal year as well. Well, although for the markets, after a 7-day rally, we did see the Indian equity markets pause on Wednesday, Sensex and the Nifty sliding into the negative territory. Broader markets did witness selling pressure yet again for the second consecutive day. And both the mid-caps and the small caps fell by 0.7 and 1% respectively. Now, this downturn came as investors also engaged in some profit booking, awaiting clarity on the US reciprocal tariffs, which will be announced on April 2nd. There's going to be increased focus on how the US-India trade meet, which has begun already, and how that will involve negotiations on the bilateral trade agreements between the two nations. This will end on Saturday, will be a very important meeting to really look at for cues. Already, overnight, what we've seen is that President Donald Trump has signed an order to implement a 25% tariff on auto imports, expanding the trade war designed to bring in more manufacturing jobs to the US and setting the stage for an even broader push on the levies next week as well. Remember, the president has said that these tariffs will go into effect on April 2nd. He also said these tariffs are permanent. He was not interested in negotiating any exceptions as well. Let's listen into what President Donald Trump really said on the tariffs.
I think ultimately we could probably anywhere from $600 billion to $1 trillion will be taken in over the relatively short-term period, meaning a year from now. We're going to have very strong policing, and it's pretty easy to do. If parts are made in America and a car isn't, those parts are not going to be taxed or tariffed. And we'll have very strong policing as far as that's concerned. For the most part, I think it's going to lead cars to be made in one location. Right now, a car would be made here, sent to Canada, sent to Mexico, sent all over the place. It's ridiculous.
All right, and that was President Donald Trump announcing the tariffs on auto parts. Remember, the auto levies will also mark a significant expansion of the president's trade fight, and it's likely to ensnare some of the biggest automotive brands in the countries, including Japan, Germany, South Korea, all the major US trading partners. The move risks disrupting operations for North American automakers that actually rely heavily on integrated chains across US, Mexico, and China. Auto tariffs could potentially target a significant swath of US car and light truck imports as well. Remember, these were valued at more than $240 billion. And of course, tariffs will raise the prices for foreign-made cars, but they will also make US-made vehicles see a price hike if the supplies and the parts are hit by levies, or if the supply chains are cut off from manufacturing in lower cost countries. So it is going to be a very, very important aspect that we are going to be really seeing how it unfolds. Remember, like I pointed out, the focus will be on the US-India trade meet, which has begun on Wednesday. It involves negotiations on bilateral trade agreements between the two countries, and it will conclude on Saturday. In fact, we also heard from Dr. S. Shankar on the US-India trade talks that are underway. Let's listen in to what he had to say.
On trade, we had a very open discussion. And the result of that discussion was that the Prime Minister and the President agreed that we would conclude, you rightly said, not a free trade agreement, but a bilateral trade agreement by fall this year. And that is what is currently under discussion. We have a team here, by the way, they're not it's not that they are kicking off the discussion. My colleague, the Trade Minister, the Commerce Minister was in the US last month. And since then, actually, we've been working the trade account through virtual means. So there's a very active and intense trade discussion going on at this point of time.
All right. Right, so that was Dr. S. J. Shankar on the US-India trade ties, and all the meetings that will be underway will be important to really look at. Remember, overnight US markets also snapped their three-day gains on the risk-on sentiments. They're facing pressures with concerns escalating about the economic impact of the trade war that could be. So Dow Jones, S&P 500, NASDAQ, all of them slipped in the red. Asian markets opened lower, and you're already seeing in the pre-open trade how the Nifty is trading with a percent loss at 23,248. So yet again, a sharp fall is expected at open. This is what the Gift Nifty is indicating at this point in time. Let's in fact welcome our guest on board to really understand, what could all of these, overhangs mean for the Indian markets and Indian retail investors. Gaurav Dua, he is the head of capital market strategy at Mirae Asset Share Khan, is now joining in. Warm welcome to you, sir. Good morning. Well, a lot of moving parts there. Overnight, we've already heard from President Donald Trump. We heard that bite today as to how he is bent on expanding the tariff talk to now autos, a 25% tariff implication. He has been stern in saying he does not want to do any exceptions or negotiations, and he wants April 2nd to continue to be, the date when all the tariffs will get into an implementation. Tell us, how are you really looking at the impact of all of this in the Indian equity markets, especially after the last 6-7 days of a recovery rally that we have seen? Will this push the Nifty back into the negative zone, sir?
So, President Trump has lived up to the expectation of he being very, very unpredictable. That is what has happened. People are waiting for April 2nd. However, he stepped in and levied 25% tariff on all the automobile and automobile part imports into US. Now, this will put a roadblock onto the good bounce that we had seen from the lower levels. We had close to 1800 points of bounce from the overall oversold kind of this position in Nifty. And people were this hopeful that this is going to stay sustained. But however, I think the volatility is back. Trump and turmoil is going to be the buzzword again, not only in Indian markets but across the world. Specific to this action, yeah, obviously the auto stock and some of the large auto ancillary companies will be in the same focus. Tata Motors, Samardhan, Motherson, Sona, this is BLW. These are some of the stocks which have fairly large exposure to US. So yes, you could see a lot of pressure on these stocks today.
Okay, so auto stocks could be definitely seen in the negative zone. We're already seeing some pressures come in the pre-open. Let's see how that continues to take shape. But from the US-India trade talks, what is your large expectation, Mr. Dua? Is that something that could result in some kind of protection for the Indian sectors that are crucial to the economy and that are more vulnerable, say, for instance, agro? Do you think trade talks could shift to shield some of the sectors, if not all?
So, this is very, very clear, despite whatever is the relationship between the Trump and Indian Prime Minister, Trump is very clearly stated that it's going to be very, very hard kind of this in negotiations. There are a lot of areas in India where the tariffs are quite high, and he is very clear about the levy of same kind of reciprocal tariffs in that spaces. I think the first priority from the Indian side would be to secure the agri side, because India is still a agriculture predominant employed country where a lot of people still depend on agriculture. So I think that's one place where they would like to focus on. Second should be, and this thing could be the core spaces like auto, steel, where I think again there could be very, very strong kind of just negotiations. But yes, there will be some spaces where I think Indian might would like to go with whatever is the levy, probably in places like whiskey and imported liquor and stuff like that, where I think the damage will not be huge in terms of India, but the damage on some of the specific stocks can be huge. So, yes, next month is going to be extremely volatile. You will have this April 2nd, you will have RBI meet, and then really followed by the quarter four earnings, which again could this thing throw up some, some this is surprises. So, I think volatility can come back after this 1 month of a strong bounce in the market.
Okay. Mr. Dua, I also wanted to get a sense on the positioning of the foreign portfolio investors. Now, remember they remain net buyers for the fifth consecutive session, despite all this volatility. 2,240 odd crore rupees in equities is what they have bought, whereas it's the domestic institutional investors which are now booking out profits at this point in time. Our FII is back for good in the Indian equity markets. Do you think they are going to be looking at India more favorably than they were looking at over the last 4 or 5 months, or where we have seen relentless selling?
So yes, the trend seem to have turned a bit, but then again, FIF flows can be extremely unpredictable. If because of whatever is happening in the world, the dollar starts to strengthen again, US bond yields go up, which we have seen this thing yesterday. The FII flows can again either this thing trickle down or could also turn negative. So it is very difficult to take a short term call on the direction of the FII flow. But yes, I think one can be stick their neck out and say the kind of relentless selling that we saw from October to Feb. I don't expect that kind of a selling over this next few months.
Okay, so that's as far as the FI positioning is concerned. Mr. Dua, in terms of the safe zone in the markets, where do you think one can still look at for probably lesser impact or minimal impact from any kind of external shocks like the US trade talks or what happens externally? Where can one really look to hedge their portfolios at this point, sir?
So it's will be if you stick to the domestic stories, the domestic demand-driven stock, I think that should be helpful. There you have both short-term up cycles as well as structural multi-year stories. For example, this year summer is going to be very severe, so there are a lot of stocks which you can play on that. Last time I was on your show, I was talking about stocks like BPL. I was
Yeah.
talking about stocks like Symphony, Blue Star. So I think these are the next few months you can see an upcycle. The downside could be this thing limited in these stocks. Then you can look at some of the value picks like OMCs. Power, I think, is a multi-year story. You because
Okay.
of the severe heat, you will see short-term demand also this thing surge in terms of the power need, as well as you've seen lot of investments are going to come in this space. Within that space, power space, I believe a lot of investment has to come in the power grid side, the grid. Now, that does not mean I'm talking only about the power grid India. There are a lot of power equipment players, transformer players, this is substation players and others, which where I think they have a growth path for next 4 to 6 years. So in this phase, if you can get some of these stocks, I think that is what the investor should be looking at.
Absolutely. When we are talking about hedging one's portfolio, looking to domestic sectors that could probably offer value at this point in time and protect you from the external shocks. What is your suggestion to the retail investors who have a well diversified portfolio, not just within the Indian domestic equities, but also have exposure to global equities at this stage in time when there are so many countries, at loggerheads with the US, looking at how this trade war will take shape or not? What is the suggestion for all those investors who have exposure to global equities too?
So, a lot of investors whom we talk to have taken, some kind of exposure to the US market, especially the this thing tech space. The Magnificent Seven of the US have done extremely well.
Hmm.
However, we believe that that trade is basically skewed, that is overdone. That is where we could see underperformance. On the other hand, we see a still scope of a better risk reward in the Chinese market. So, if you want to take some global exposure, you can go and buy basically ETFs of the say Hang Seng, or or the Chinese market to play that upside. I think that is where you can take some exposure, because we believe that after a long time, Chinese market has started to look up. Economic environment is looking this thing better. So despite the 25 to 28% kind of upside that we have seen in that market, we still believe that there is this thing upside there. Valuations are also very comfortable there.
Fair point. When we talk about the Indian markets, the index alone, sir, has bounced back 7 to 8% from the recent lows that we had tested. There's been a bigger rebound for the mid and small cap indices as well. Just wanted to get a sense, even if these, external stocks were to continue for next 1 week or month or so, do you think we have kind of made a bottom from where we have bounced back, or do you think we still have the risk of slipping below that one more time?
So, it's very tough to call the bottom, but
Yeah.
yes, my sense is that yes, where we formed the bottom at around 21,800, 900 is a good level, and that should be held on. But this is not what I am confident about in terms of small cap index. I think small cap index could possibly make a newer low in if you have a another this leg of fall. So that is where I see the risk.
Okay, that's where the risk could be seen. So one has to be really cautious about that. Let me just take a names of few stocks that we all can look at for the stocks in news list. That's something that we can all focus on again. We are 3 minutes away from the markets to finally open. Already seeing the Nifty down in trade, indicative of a negative start. Auto stocks like Tata Motors, indicative of a sharp lower start at about 5.6% lower. So we have to look at the auto space very closely. There's a 52 point of a decline on the Nifty 50, 23,433. Let's look at some stocks. So BSE will be in focus. Remember, the stock exchange firm is going to be considering issuing of bonus shares during its board meeting on March 30th. One MobiQuick Systems. There is this MCA approval that they have for the incorporation of an arm for securities broking business. So expanding, forays over there into the securities broking business for One MobiQuick Systems. Vedanta, they have appointed Tata Steel veteran Rajiv Kumar as the CEO of the aluminium business. We'll keep an eye out on that. NBCC will be in focus. The state-owned company has signed an MOU with Mahatma Phule Renewable Energy and Infrastructure Technology to undertake housing and urban development projects worth 25,000 crores. That will be in focus as well. This collaboration aims to undertake wide range of consultancy, fee-based EPC redevelopment projects from concept to commissioning. That's something that is going to be keeping the stock in focus today. IT Pack, you have Wipro in focus. The company has announced that it has won a major 500 million pounds of around 5,500 odd crore rupees, and 10-year strategic deal with Phoenix Group. That's something that we can definitely look at. We also have Infosys that could be in focus. There are only news reports which are unverified by Business Today that I'm going to be sharing with you here. They believe there are some news reports that are indicating that the company has further laid off about 45 more people from its initially hired 1,200 engineers it had onboarded between October and November. This is what, as part of its ongoing layoff plan that the company has been doing. This is again, as news reports have mentioned. Bharat Forge will be in focus. The Ministry of Defence has signed a 6,900 crore rupees contracts with Bharat Forge and Tata Advanced Systems for the towed artillery gun systems and high mobility vehicles, towing vehicles to enhance Indian Army's operational progress. So that's something that will be in focus. Ashok Leyland, well, the company could be in focus. The company has said that the electric bus unit, Switch Mobility, could shut down one of its British plants. That's something that they have mentioned. But this could lead to profitability, is what they are hoping. But they've also pledged some shares as far as the promoters are concerned, and therefore you see some dip on that front. Newgen Software will be in focus. The company has won an international contract worth $1.28 million for its enterprise content management solution. That also will be in focus. Let's shift focus to the market opening as well to see how some of these key pockets are trading in trade. So we have 23,454 marginal downtick on the Nifty, 30-point lower start for the Nifty 50 today. Let's look at the Nifty Bank as well to see if that's any respite. Yesterday they were under pressure. Again, softer start for the Nifty Bank as well. Let's pull up that index too. So important to see how that one is opening in trade. And of course, apart from this, let's also look at some of the key stocks, heavyweight counters, Reliance Industries, IT stocks like Infosys, Wipro, that will be in focus in trade today. Let's also look at some of the banking counters as well to see how those will be opening. We'll be coming back to the data points, but Mr. Dua, I want to understand from you. One has to really look at some of these key heavyweight pockets like IT and banks. How should one really look at it? Banks of late have been showing us some kind of a recovery. What gives you confidence within the entire sector to continue to bet big on this?
So, banking is an extremely large space. We believe in banking if you stick to the quality names, private sector banks, that's where it's a space which is going to outperform. And that's a space which is actually underperformed for past 2 years. And now I feel that this is where this you can see outperformance in basically IT. I think you got to be very very selective now because IT is having double impact, both of the need to transform the business because of AI. Second, you have a lot of pressure on Nasdaq and the technology stocks in US. That also has some kind of a sentimental impact on the valuations here. So IT is something where we have been positive. However, we think now it's this is where you could be selective rather than taking a clear sector call here now.
Okay. Shifting back focus to the market opening, now all the data has started to pour in. We have weakness on the major indices, the Nifty, Sensex, the Nifty Bank, even the midcaps are down in trade. Top losers on the Nifty are Asian Paints, Bajaj Auto, Sun Pharma, M&M, about 1% lower, Dr. Reddy's, Hero Moto about 0.8% down, Maruti Suzuki about 0.5% down. So the auto space definitely is on the back foot. Bajaj Auto over 1% cut that can be seen on this one as well. The advanced decline ratio is skewed towards the declines now. About 1,085 shares on the declining side on the NSE, whereas 848 stocks on the positive side. We also have banking names which are on the losing side: Canara Bank, SBI, Axis Bank, IndusInd. All of them are again slipping in trade today. Auto clearly is on the slowest lane possible. It's hit speed brakes. Tata Motors down 6.5%, lower in trade. So you can actually see a whole host of brunt of the Trump auto tariff talk that is being felt on this space. L&T, however, on the positive side, brokerage houses are positive. Trend again 1% up. There are targets of over 7,000 levels that are coming on this one. Slight flat with a positive bias on Reliance Industries, ICICI Bank, also on the positive zone. So just a far and few between stocks that are opening higher in trade. Let's welcome Arpit Beriwal, analyst derivatives at Wealth Management, Motilal Oswal Financial Services, who's joining in on the program with us. Arpit, warm welcome. Good morning to you. How do you see the opening of the markets?
Very good morning, Sakshi. So, if you talk about Nifty first, Nifty has seen a very stupendous rally post Holy weekend. If you see from 22,500 to almost 23,800 levels, we've seen a rally of almost 1,300 points in Nifty. Last 2 to 3 days, we have seen some profit from the higher levels from 23,800, which was the earlier hurdle zone. And on the immediate basis, index is already corrected 200 to 300 points. So now after a sharp rally, index is expected to be in a range, trading in a range between 23,350 to 23,800 zone. That would be the broader range. Today being the monthly expiry, so the OI data is maximum at 23,500 strike. So that would be an important level to watch out for. Where does the Nifty heads towards? But on the immediate basis, 23,333 is a major support zone for the Nifty. On the upside, 23,800 is a supply zone. We'll talk about the Bank Nifty. So if we talk about Bank Nifty, has seen a very good outperformance in the last couple of sessions, almost a rally of 4,000 points from 4,800 to 52,000 levels. In the last couple of days, we have seen a cool of almost of 1,000 points. So Bank Nifty is likely to outperform, but before the next leg of rally, index is expected to consolidate within the range.
Okay, got that. So that's the overall view on the markets. We'll come back for some stocks, Harpreet, but let's also welcome back Mr. Dua into the conversation. Mr. Dua, circling back to the auto space yet again, because that's the one that is showing us weakness right after Trump's 25% tariff talk. Are there still any spaces that give you the confidence to probably overlook the immediate knee-jerk reaction, buy on dips, and hold for long term within the auto pack, sir?
So, in auto, Mahindra and Mahindra, we feel is a domestic story. The SUV part of their business is doing extremely well. Farm equipment is also started to pick up. There are some other distinct triggers in the stock in terms of their scale up of the EV distinct car business in this quarter two. So that's where we believe that the valuations are good, risk reward is good. Secondly, the news that we have seen today, where Ashok Leland has taken steps to reduce their losses in the Switch subsidiary, where they had losses in UK, and they're going to cut it down, and they have given a very strong guidance in terms of growth of that business in India. So I think that is again a stock that will look good, and we could see some shift of the institutional flows from Tata Motors to Ashok Leyland now.
Okay. Arpit, coming to you on the auto pack, Tata Motors is seeing a very, very sharp fall today. You have the others also coming into the fold of Trump's tariff impact. You have auto ancillary names that are coming into that impact as well. How would you look at both autos and auto ancillaries right now? Any key stocks that you would probably bet big on despite of all this news, or would you actually want this to play on to really help us understand how long will the trend continue on the downside?
Talking about the auto index first and foremost, the top out that we seen in the last year, September 24, since then we have seen underperformance in the entire auto pack. And if we talk about the particularly Tata Motors, so from the August series last 7 to 8 months, the stock was continuously falling on the monthly scale. If we talk about the immediate last couple of weeks recovery, so the way back, the Tata Motor gave range breakout above 670, 680 levels on the monthly scale, and the stock has taken again support near its major support zone near around 610, 615 levels. So on the monthly and on the price setup wise, it is near major support zone. But as we are seeing the ongoing news and some other thing that is continuously playing a spoil sport for the auto sector as a whole, so we would like to be very much selective. Tata Motor can be bought, but at the lower levels, that would be much more better. Near 630, 650 would be a preferable range because it's trading near support zone. But apart from that, chart wise, if we talk about relatively Aisha Motor, if we talk about the overall Aisha Motor, the auto index, Aisha Motor is relatively outperformed. And on the monthly scale also, it is trading in life high territories. So chart setup wise, Aisha is a strong uptrend. On the monthly, it has been stuck in a range, but near its life high territory. On the weekly and the daily scale, it is trading about its short-term moving averages. So if we talk about the auto index, relatively Aisha is likely to outperform in next couple of quarters. So Aisha would be a preferred pick based on the price setup and going forward for next 2 to 3 months.
Okay, fair point. So that's as far as the auto pack and the viewpoints are there. Mr. Dua, I wanted to also come on some select stocks then to help us and our viewers understand what should be the strategy on that one. trend, is back in focus. It's recovered quite strongly from its recent lows that we have seen. It had been the erstwhile wealth creator of 2024, the only Nifty stock that doubled investors' money. And yet again, after the recent periodic consolidation, we are seeing the stock continue to further inch higher. Now there are brokerage houses penciling against higher targets of 7,000. Do you think those who missed the erstwhile rally, this is the right time to bet big on Trent again?
Yeah, I think Trent is giving you an opportunity. It has come down sharply, and this is a stock where they have done exceedingly well in terms of the execution, in terms of the value retail format, which is growing at a healthy 25 30% kind of rate. So yes, Trent, though it is still not cheap, but it is a stock which you can buy, accumulate, and hold on for some time. Apart from this, we are also focused on some of the regional value retailers, like this V2 retail, which we are holding in our fund. That is also where we see that the growth is very very structural. It's a very strong growth, and there is a scope for improvement in the margins there, and stocks are not too expensive.
Okay, got that. So that's as far as the trend counter is concerned. Arpit, do you want to add on to any chartical numbers or levels that we need to keep an eye in mind when we talk about trend?
Sakshi, if we talk about trend, as rightly mentioned by analysts, the stock has sharply fallen in the last couple of months from almost 7,500 to 5,300 levels. If I look at the monthly setup wise, where the fresh leg of rally started way back in May 2024, about 5,000 levels, we've seen upward one way upward move towards 8,000 levels. So now it's back to its support zone. So from a medium term perspective to long term, the risk reward is quite favorable from an investment perspective because major support is around 4,800 levels, and slowly steadily the stock can head towards 5,600 5,800 levels as mid cap and small cap is again recovering from low levels. So definitely from a long term view, definitely it's a very favorable junction with a major support around 4,800 on an upside move towards 5,600 and 6,000 plus levels.
Okay, fair point. So that's as far as Trent is concerned. The other stock that I wanted to get in view is BSC, another wealth creator of the past, capital markets related stock. Slowly and gradually coming back into flavor, and now there is news. March 30th, there could be bonus issue consideration as well. Mr. Dua, do you think once again this stock could be looked at? 4.5% of an uptick, huge volumes, and it's at the day's high now, 4,685. Back again in flavor?
So we had actually, downgraded the stock about a month back when it had crossed the 5,000 levels, and
Okay.
we still believe, valuations are not cheap, and there is pressure in terms of the volumes in the FNO segment. Lastly, the stock is pretty expensive compared to NSE. So I
Hmm.
think the major re-rating for the short term is already done in the stock, and the stock is extremely volatile in terms of the conditions in the market. So we would rather like to play the equity market or saving or investment theme through the wealth managers, which are there in the market listed, and where we have much more predictability in terms of growth.
Okay, fair point. So that's the move that we are expecting on PSE. There are many other stocks in the Nifty 500 list that are actually moving up in trade. You have Newgen Software that's up and about in trade today. Smart moves that can be seen on this one. Of course, again, here we are seeing some news flows that are impacting. The company has won this international contract that's supporting the sentiments. You have GSFC, Deepak Fertilizers that's up in trade. So the agri fertilizer irrigation kind of stocks also coming back. Policy Bazaar is up and about. Tejas Networks, Hoodco, Zeal, DB Realty. A lot of moving parts here. Even Zomato is recovering about 0.1.8% higher. We have a lot of discussion points here, so we'll take these points one by one. First up, let me just discuss the space of the quick commerce food delivery, Zomato versus Swiggy, with you, Mr. Dua. Yet again, what exactly is your focus? BofA yesterday downgraded the stocks, cut the target prices further. How are you navigating through these moves? On the one hand, we have IPL and the demand scenario that could be probably aiding the sentiments for the space, and yet again valuation discomfort, competition, those kind of scenarios emerging for these the leaders in the quick commerce space right now. How would you place Zomato and Swiggy at this point, sir?
So, we've been sticking with the leader, Zomato. Zomato is a high beta kind of a stock. So whenever there is fall in the market, volatility, it really falls at a much higher rate compared to the indices. This is what we have seen. Now I think we have come to a very attractive kind of a level. And in the short term, however, we feel that the stock can remain under pressure because there are a lot of new players who are basically entering the delivery space, and especially Amazon, Flipkarts of the world. So Blinkit will see a much higher competitive pressures in this short term, which can have an impact on its profitability. So that's where we believe that as we have these rollouts from the other players, Zomato could underperform. However, we believe that over a medium term, things will stabilize and Zomato will come back in favor. So, as an investor, I think these basically corrections are an opportunity to accumulate. However, as a word of this caution here, near term outlook could be mirrored because of the competitive pressures.
Okay, fair point. Let me bring in Arpit also into the conversation. Arpit, new age tech stocks, not just the food delivery basket as a whole. What are you looking at right now on charts? What's looking good? We have Policy Bazaar that's up and about today. Paytm slowly and gradually is inching up. One more big quick systems. There's this news that they are going to be, probably with one of their subsidiaries, they will be opening the securities business as well. So expanding their reach beyond their core business. How are you looking at what's happening in the new age tech space?
Sakshi, you can see overall these stocks have been quite volatile in last couple of months. Good correction we have seen from the high levels, whether it's a Paytm or Policy Bazaar or Zomato. So if you talk about the price setup wise, looking at the chart setup of Policy Bazaar, so overall the nature of the stock was an uptrend. Post the correction in the Jan Feb series, we have seen a good correction from 2200 to almost 1400 levels. However, good recovery on the monthly scale we have seen from 1500 1400 levels. So I think from a risk reward perspective, and as we see the bigger trend is positive of this counter, Policy Bazaar would be a preferred pick as per the price setup wise. So I think a major support is seen here around 1350 1450 levels, and with a bigger time frame with a 3 to 6 months perspective, definitely as we see some recovery in the market and slowly the momentum picks up, so Policy Bazaar can again head back towards 1800 and 2000 plus levels. So I think this would be a preferred pick within this space.
Okay. Mr. Dua, before we let you go, any key stock ideas that you believe investors can look at? You've mentioned quite a few from various aspects. Anything in the mid and small cap space that you could highlight, sir?
So yes, in the mid and we talked about V2 retail already, that
Yes.
we are pretty bullish on. VBL is another stock that we like. ZF Commercial is another stock that I think will benefit from the changes that are expected in the auto sector, and it is again a domestic play. So I think these are some of the stocks that you can focus on.
Okay, fair point. Thank you so much, Mr. Dua, then for sparing your time for us and explaining to us, what's really going to be impacting the market sentiments and how should we really take the benefit of this volatility as retail investors. Thank you so much. Appreciate your time. Meanwhile, first 15
Thank you
minutes
so
of
much. I just want to add that most of the stock that I have spoken about are covered by us. They are also being recommended by us to our clients, and we might be holding them in our fund.
okay disclosures in place. Thank you so much, sir, for being with us on the show. Meanwhile, first 15 minutes out, and you can actually see a recovery in the markets. 23,500 is back on the Nifty, about 0.18% of an uptick that you can see. It's been a slow, gradual, but definite uptick that you've already seen a built up. Despite the volatility index showing up almost a percent uptick, you are seeing the markets move higher. The Nifty Bank shrugging the kind of news flows coming in from the US on tariff talk, further lifting the market sentiments up. That's the one that's outperforming among major indices, 0.4% higher, 51,422, 217 points uptick on the Nifty Bank as well. The key contributors to the Nifty and the Nifty Bank rallying. ICICI Bank is the top contributor on both the Nifty and the Nifty Bank at this point in time, contributing nearly 20 odd points to this uptick. It's almost 0.8% higher. Reliance is also supporting the sentiments, 13 points higher. You have HDFC Bank, Axis Bank, again from the banking space that's supporting, L&T that's supporting, Infosys also about 7 odd points of a contribution from the higher side. Although on the lower side, it's the auto space that is getting dragged. Tata Motors, M&M, top contributors from the lower end on the Nifty. Sun Pharma, HCL Tech, Eicher Motors, Asian Paints, Bajaj Auto. So the auto space is the weaker link at this point in time, but from the lower levels, the Nifty has recovered 140 odd points, and that's a strong momentum that we are seeing. Let's go back to Arpit to help us understand what does this move really mean. If you know expiry session, is it going to be a brighter green shade?
Sakshi, we see the bigger trend of the market has changed from bearish to bullish. And if we see the rally from last 7 to 8 sessions, we have seen a very strong rally. And last 2 to 3 days, we've seen some profit booking. So definitely the trend is intact. But as we have seen a good move, index is likely to consolidate. And we talk about 23,350, 23,400 is a major support zone. That is also its 200 DEMA. And today being the monthly expiry, so definitely a lot of swings is likely to be there. But as you have seen in the initial hour of the session, good recovery from the lowest levels, and the good part is that banking is relatively again outperforming. That clearly indicates that the resilience is there at the lower levels, but at the same time upside is also capped because of the expiry, as OI data suggests clearly 23,650, 23,750 has the maximum call OI. That clearly indicates that the upside is also paused. For Bank Nifty also, levels wise, if we talk about 51,000 is a major support zone. That was the gap area, and right from there we have seen good recovery from lower levels, mainly led by ICICI Bank. So just to add on to that also, if we talk about the banking space, we have been quite positive on this space from last couple of weeks, and within that also right now also stands to be positive, mainly led by ICICI Bank. So within the banking space, ICICI Bank is a favorite and the top pick. So purely based on the chart perspective also, a very strong chart setup on the monthly scale. On the daily scale, some cool off is seen from 1370 levels, but again today we have seen a good recovery from the lower levels. So I think slowly steadily again the stock can head back towards 1380, 1400 levels in next couple of weeks. So ICICI Bank would be a preferred pick within the banking space, and that is likely to lead the momentum going forward.
Okay, fair point. Hope that has really given you a sense of how to really play the major indices and some of the key stocks there. What about the mid and small caps, Arpit? Would you be looking at this space? Last 2 days, this space has actually felt a major brunt of the volatility. But do you think things stand to improve? There's a flattish trade right now. It's improved from the opening low as far as the mid caps are concerned. Small caps still in the red. But do you think there are some stocks that are worthy of looking?
Definitely, Sakshi, if you see some cool off was seen from the higher levels in last 2 days. But if you see the setup wise, selective stocks are very strong. So one would be from the chemical and the fertilizer space. We talk about Chambal fertilizer. So if I look at the chart setup on the monthly scale, it has given a classical range breakout above 580, 590 levels on the monthly scale after almost 6 to 8 months. On the weekly scale, it has given again a range breakout above 595, 600 levels. Daily scale, a classical range breakout above 622, trading a life high territory, and definitely the stock has momentum for another 6 to 8% rally towards 650, 660 levels. So this would be a first pick within the mid-cap space, Chambal fertilizer, with a major support near around 595, 95 levels. Slowly steadily the stock can move towards 650, 660 levels. Another counter has been our favorite from the tourism pack, that is Indigo. So if we talk about Indigo, in spite of the market fall in last couple of months, Indigo was the first counter that has regained its momentum and again back to trading its life high territory. So if we talk about the purely chart perspective, on the monthly scale, it has given a classical range breakout above 5,000 levels after almost 6 months. And the good part is that it is holding at high levels. On the weekly scale, also a range breakout above 4,950. And on the daily scale, it is consolidating at high levels in spite of market choppiness in the last couple of days. So I think Indigo, definitely the base of the stock is shifted higher from 4,500 to the next base is around 4,800, 4,850 levels. And slowly steady, the stock can head towards 5,200, 5,350 levels. So Chambal and Indigo would be a preferred pick within the space to play the outperformance in going forward.
Okay, fair point. We'll keep an eye out on that. The other space that I wanted to get a sense on is the real estate space. How are you approaching that pack as well? And what really looks good here? There have been several brokerage houses reports, even though it's the luxury segment that's really outperforming and looks good, and as has been the case in the last couple of years for the real estate story, that's been pulling up the sentiments for the entire pack. Again, 0.4% of an uptick on Nifty Realty. What would you bet big on from this pack?
If I talk about the overall reality pack, if we see the charts otherwise, some cool off was seen in last couple of days. But if we see from the structural monthly and weekly perspective, technically wise, if we see the price setup of Loda, if we see the charts otherwise, again and again it has recovered from the levels around 1,050, 1,080 levels. So technically on the weekly scale, it has formed kind of a triple bottom on the weekly scale. A strong bullish candle recovering the losses of the previous week, followed buying at the higher levels. So I think not from immediate, but at least from 1 to 2 months perspective, definitely this would be a preferred way within the reality pack with a major support around 1100, 1120 levels. Slowly steady the stock can head back towards 1280, 1320 levels.
Okay, fair point. We'll keep an eye out on the real estate pack there as well. But let's look at what else is buzzing in the markets. When we look at the Nifty 100 list, beyond the Nifty is the banking space that's looking good. Bank of Baroda, Union Bank. We also have REC, PFC that's up and about the erstwhile power financiers that have been favorites. HAL is again up by about 1.5% in trades today. Let's actually discuss the defense space. Today, of course, for Bharat Force, there's been this positive news. Government is again looking at doing a lot of, order signs at this point in time for long-term order contracts for Indian defense companies. How are you looking at HAL, BEL, and the rest of the pack? The shipbuilders, for instance, these spaces have had faced maximum drubbing in the ongoing correction that we've been seeing. But slowly and gradually from last month, they started to pick up gradual pace and have actually recovered 15, 18, 20, 25% from their lows also. How would you look at some of these counters within the defense stories?
Sakshi, if we talk about defense story, and this has been the theme for a lot of time, we have seen a lot of pain in last 6 to 8 months, but finally we have seen a very strong recovery and strong relief rally from the lower levels. So if we talk about the index perspective, our top two bets would be HL and BL. So first we talk about HL. If you see the monthly chart, after almost consecutively falling for last 9 months, a strong bullish candle was found on the monthly scale, recovered almost its entire month losses, and a good support zone is seen. So if we talk about the daily basis also, retest of breakout on the daily scale near its 50 DEMA, holding well above its 200 DEMA, a classical range break about 4,100 levels. So I think HL slowly steadily can head towards 4,400, 4,500 levels plus levels with major support around 4,000 levels. If we talk about it from the second counter, BL, so BL also has seen very relatively outperformance within the entire space. So if we talk about from life highs, is barely 8 to 10% lower. So if we talk of the monthly chart of strong bullish engulfing candle, weekly scale higher highs, high lows formation. On the daily scale, some profit booking was seen from the higher levels, but definitely the trend of the stock is positive. Any dip near 295, 294 levels will be again a buying opportunity with a major support near 285. Slowly steady, the stock can head towards 320, 330 levels. So this two would be a favorite pick as per the within the defense pack, looking at the price setup wise.
Okay, got that. Let's look at the FNO space as well. What do you expect on the FNO space? We'll talk about the key stocks as well, but the overall rollover strategy, what exactly should one keep in mind for trading on the last day of the expiry?
So first, as you have seen, monthly expiry and this series has seen been a roller coaster. After a pain of almost last six consecutive series month, we have seen very strong comeback by the bulls. So if we talk about first from the price level perspective, 23 550, 23 600 levels you are closely watching, and the immediate is 23 850 is a major hurdle zone. So if you see the charts that are on the monthly scale, 23 850 is a major hurdle zone. At the same time, 23 550, 600 is the immediate support zone for Nifty. So tomorrow would be the monthly closing, but as from a monthly expiry, looking at the broader picture and the rollover data, broadly it is in line. And look at the chart setup wise, 23 350, 23 4 is a major support level for Nifty. Till it holds above this, our bias would be positive towards 23 850, 24,000 plus levels. Talking about Bank Nifty, so this series, if we talk about Bank Nifty, is almost up by almost 6.5%. That has been almost after 7 to 8 months. And we see the price setup wise also a classical double bottom breakout on the weekly scale above 50,650 levels and a strong rally towards 52,000. So I think the base of the banking index has shifted higher from 48,500 to almost now 50,500, 50,650. So from a level perspective, 50,750 is a major support, and slowly steadily, definitely from the coming series also we can see some uptick going forward. So overall, and the price action, the bias is positive for both the indices. However, sector specific action is likely to continue.
Okay, fair point. Well, on that note, we will thank you then, Arpit, for being with us on the morning edition and helping us navigate through all these moving parts of the markets, especially on the FNO expiry session, helping us the key strategies on the benchmark indices, the major indices, and the key stocks that we could be looking at for this expiry as well. Thank you so much for being with us on this special edition. We'll have you back very soon on another edition of Business Today Television. So stay tuned with us. In the interim, and hope you have a great time. Viewers, we'll wrap up the markets for the morning edition then. The Nifty about 0.15% higher in trade, 23,521. So that's a comfortable zone to really look at. It sustained in the first half an hour above 23,500. Let's hope that this only continues for the better. The Nifty next 50, 0.3% higher. Nifty Bank about 0.4% up. You also have the financial services about 0.5% higher in trade. Then when we look at the other indices, you have the Nifty 100, 0.2% up. The mid and the small caps also in the green zone, flattish with a positive bias for mid caps, small caps up by 0.2. The India VIX is also up by 1%, so keep an eye out on that as well, because that's something that we need to keep a keen eye out on today. Auto space is down by 1.6%. Top drag on the markets today, and rightly so, right after, and this was being expected after Donald Trump's tariff talk. We also have FMCG, IT that's on the sluggish zone. Pharma index about 0.8% lower in trade, healthcare also down. You have the real estate space flattish with the negative bias. But what's looking up? PSU banks, metals. You have names like private banks, consumer durables, oil and gas. You also have names within the mid and the small cap financial services spaces that are all buzzing in trade. Let's look at the top movers on the Nifty then. You have names like L&T, 1.6% higher, Shriram Finance making a comeback, Wipro, HDFC Life, Trent. Of course, the brokerage houses, kind of tailwind that's supporting the sentiments on this one. ICICI Bank, Hero Moto, which is kind of bucking the trend for the entire auto space at this point. Let's look at the lower end. Tata Motors down 5.5%, 669. Sun Pharma, Dr. Reddy's, Aisha Motors, IndusInd Bank, and M&M as those stocks which are declining on the Nifty 50 at this point in time. Within the Nifty 500 basket, what's moving higher and showing a strong momentum is Newgen Software, BSE, Bank of Baroda. You also have names like Chalet Hotels, that's up and about, NBCC, Policy Bazaar, Aadhar Housing Finance, these kind of names that are doing well. But on the lower end, you have names like Sona Comstar, Motherson Simi, again from the auto ancillary pack, that are really facing the brunt. JB Chemicals and Pharma also on the declining zone. KPIT Tech giving up some of its gains. KNR Constructions, HEG are all those stocks that are lying low at this point in time. When we look at the Nifty Bank, clearly is the supporting zone. Out of the 12 stocks, it's the 9 stocks on the Nifty Bank that are actually supporting the sentiment. So clearly look at the Nifty Bank, 51,500 is being seen on this one, the strongest of the major indices in today's trading session. We'll leave you all at that as far as the morning edition of Market Today is concerned, viewers. But do stay tuned on to Business Today Television. Throughout the course of the day, there will be various interactions with top market masters that we'll be bringing to you at 12 noon. In case you have some doubts on your stocks in your portfolio, then you can send those doubts to us. 12 noon daily calls will be up and running with 2 market experts helping you out with the right strategy on your portfolio stocks. So bring them to us. Keep writing the questions to us. The WhatsApp number keeps flashing on various platforms, and you could also reach out to us on our social media platforms with all your questions. Thank you so much for being with us on the morning edition. Hope you have a great time. Till the time we see you next.
Get ready for the grand finale. After electrifying events in Delhi NCR, Mumbai, Chandigarh, Kolkata, Hyderabad and Bengaluru, corporate leaders reunite for the Silver Jubilee